Yo, yo, want to make sure y'all can hear me. Let me make sure my sound right. There we go. Want to make sure y'all can hear me. Make sure my sound is right. All right. I didn't want to really do this live. I want to record a video, but I really didn't feel like editing. And this is going to be a quick video. Nothing too long. So like I said earlier, I was going to go out and go do some Uber Eats and stuff like that to go make some money. I'm only $36 in, so I'm going to go back out because I do want to break over $100. And it's storming in Michigan right now, so things is a little crazy. But while I was driving, I got a notification from public.com. If you guys don't have it, click the link in the bio and get you some free stocks with Public. And they was doing a review of the Facebook earnings call. And when I when I just checked into there, I started doing more research and it got worse, worse, and a lot more worse, man. So it's really not any good news with this one. It is all bad. So first I'm going to just play a clip. It's like 2-minute clip of what I screen recorded while I was driving, so y'all can be up to date of what's going on before I talk about it. Let's see.
Been getting hammered on its daily active users. That miss only came in at 1.93 billion versus 1.95 billion. And it's not just the daily active users, the monthly active users also down, only coming in at 2.91 billion versus 2.95 billion, which was the expectation. And the average revenue per user. So see, Jason, I think this is a really important one that people need to pay attention to. So this average revenue per user, this number came at $11.38. This is kind of what was expected, but considering, right, the daily active users are down, the monthly active users are down, they are planning this huge capital spend, right, this year, perhaps into next year, as it tries to stake its claim in the metaverse. When you parse through this report, how do you take in what's going on the user front?
Well, I think you mentioned a lot of it right there. I think it's this confluence of a lot of things happening at once that are going to be a real problem for Facebook. I mean, it's already so big, right? I mean, they already have so many users around the world. It just becomes more difficult to grow in a meaningful way. So that's kind of a nice problem to have. But the flip side of that is, as time goes on, investors, we want to see them do more with that massive user base, right? I mean, over time, you should really be able to leverage that user base into more profitability. Now, I mean, we understand. I mean, they are going to be faced here in the near term, at least, with additional expenses when it comes to things like safety. And that's going to be something that certainly plays out into the financials there. But also, I mean, impressions are simply not as profitable as they once were, right? I mean, it's just a little bit of a different story now for a business like Facebook than it was before. You have to wonder, I mean, sort of this transition from Facebook to Instagram, right? It feels like it's becoming more of an Instagram story. But then if you pay attention really to what Mark Zuckerberg is saying, I mean, honestly, this is ultimately going to be a metaverse story, right? I mean, that's the reason for the change in the name. That is the reason for breaking out. If you notice in that release there, they now start talking about the Facebook family of apps along with the Reality Labs revenue, right? They want to paint a little bit more of a clear picture as to where the business has been and where they see it headed.
So, for those that are new in here, what's going on? We are talking about Facebook, about Meta. Their earnings just came out today, and they did a call. And the call, it's all bad news. And I'm talking about what's going to happen with the market. So let's look at this article. Now, you see it say Facebook shares plunge more than 20% on week's earnings. Big forecast miss. Ooh, boy, oh boy, oh boy. So if we just go down right here and say Facebook shares tumble more than 20% in extended trading on Wednesday after the company reported disappointing earnings, gave weak guidance, and just said user growth has stagnated. Here's the results. Actually, I will read it down here. I think they will probably talk about it more in depth. The company, which was recently renamed to Meta, issued disappointing guidance for the first quarter, in addition to coming up short on its fourth quarter profit and user numbers. Daily active users on Facebook were slightly down in the fourth quarter compared to its previous quarter, marking its first quarter decline. And on the record, Facebook said its revenues in the first quarter will be $27 billion to $29 billion, while the analysts were expecting sales of $30 billion, according to whatever that is. That would mean 3 to 11% year-over growth, while the analysts were expecting 11%. Facebook said it's being hit by a combination of factors, including privacy changes of Apple iOS and however you say that word, challenges. I'm not even about to try to butcher that. Macroeconomic challenges. It blamed the lower than expected growth in the part of the inflation and supply chain issues that are impacting advertisers' budget. There are also a shift to products that don't generate as much revenue as its core news feeds. For example, people are spending more time on its Reels video. That is important, y'all. Reels videos. On its impression side, we are expected to continue headwinds from both increased competition for people time and shift engagement within our apps towards video surface like Reels, which monetize at a lower rates than the feeds and the stories. And they continue to go on. Meta said family apps saw a revenue of $32.79 billion with an operating income of that. So this is really what's going on. We're going to talk about it a little bit. So when they say the shares go down like in the after hours, this is what's going on. Now, this is today. Today, Facebook was up 1.25. It was up 1%, right? And you see right here, this is like the market open. You see 10 a.m. and you see this is what happened, right? It started at that price and it ended at 323, right? So it was up. This is after hours. When everything closed, stuff can still get popping. And look at this. This is unheard of. So 323 and after hours, it crashed all the way to $248. 20%. This is huge. Like big time bad. We do not want to see this. So this is giving us a hint of what to expect for tomorrow. Now, in my opinion, shout out to everybody that just came in here, but my genuine opinion is this is about to destroy the tech market tomorrow, and this is gonna help crash the stock market more because it's like a venture every single day. We don't know what to expect. You had Apple saved the week last week. Then we had Google saved the day yesterday. And then you had UPS saved the day. And now you about to have Facebook is going to doom and gloom. And tomorrow we have Amazon announcing their earnings. So if they announce bad earnings, it's going to be even worse. I want to know what y'all thoughts about that. I believe the market is definitely going to crash heavy tomorrow, mainly in the tech sector. It's going to be a big buy-in opportunity for a lot of people. But the thing is, should you buy tomorrow? I'm going to probably dib and dabble just in a little bit of a few stocks because it can keep on going down. Like I said before, this is going to be overall a red year. And we will see. But, you always want to buy on a dip. The dip opportunity will be there heavy. So Joe said, wait, I'm first. What's up, Joe? Hope all is well. I just wanted to get on here real quick. So let's see what the experts is saying before we check out what the rest of the market is looking like for tomorrow.
Worry about spend. And we're also worried about the fact that you said this is rare when it happens. We're seeing this more and more with the after hours swings. Netflix, Google to the upside, Netflix to the downside. We're seeing these mega cap tech names trade like they're $5 stocks. This is tremendous. It doesn't do anything for confidence, for investor confidence. So everything that we gained in the last day or so is probably out the window. I'm more concerned what it means for the overall macro market than what it means for large cap tech.
I came across this house with water dripping from the ceiling. You
It's
never
actually
know
more
when
to
something
it. I
like this
think
will
it's
happen.
just the
So let the
ads.
Geico
It's messing
Insurance
with it.
Agency help you with homeowners insurance. Now, if I had to guess, I'd say
no,
somewhere upstairs there's a broken pipe.
Bundle and save even more at geico.com.
Geico.
Of Apple iOS headwinds, of under-monetized surface areas, and then come out of this tougher comp era. So probably this remains under pressure for the next, call it 3 to 6 months.
Obviously, that 3 to 11% growth, that was the spookiest thing about it. I try to think back, there was a time in 2018 where they missed on revenue, they missed on growth, I think, and the stock went down about 20% then as well. At the time, it was also sort of under a cloud of Cambridge Analytica and whatever the PR du jour thing was then. So to me, it seems like it's kind of overdone, but I want to hear what's on the call. The thing that I actually didn't expect that they talked about enormous CapEx numbers for next year, but they weren't very different at all from prior CapEx numbers. I thought they would kind of scare the street with very, very big CapEx numbers. That did happen in the fourth quarter, but they didn't cite that for this current year that we're in. So that was actually a little bit surprising to me. I mean, all that having been said, though, I think this reaction is quite extraordinary. But let's hear more color from them. I'm neither a buyer nor a seller.
It sounds to me like they're distracted. And what happens when you're distracted is you spend a ton of money and you wind up taking your focus off the ball. We're not worried about congressional regulation anymore. We're worried about eyeballs. We're worried about spend. And we're also worried about the fact that you said this is rare when it happens. We're seeing this more and more with the after hours swings. Netflix, Google to the upside, Netflix to the downside. We're seeing these mega cap tech names trade like they're $5 stocks. This is tremendous. It doesn't do anything for.
Now, that's interesting what Buddy said, because he said you have these top companies, like big time, big name. Facebook is one of the biggest companies in the world. He said they are trading like $5 stocks. You don't pose to be no big company. No big name company don't pose to drop 20%. That happened with this marijuana project penny stock that your cousin was telling you about. That do not supposed to happen with big $1 trillion companies. So it's definitely bad. I don't like it. Now, another interesting thing they said, you got to think, how do Facebook make money? Let's just think about it. Keep it 100. How do Facebook make money? We are on there. We are updating statuses. We are talking to each other. We're in different groups. The way they make the majority of their money is by ads, sponsorships. So you will have Toyota, you will have E-Trade, you will have all type of Doritos will come to Facebook and be like, hey, when people is watching this content, here go 10 million, plaster this demographic or target audience are ads, right? And it's supposed to make the money. But the problem is people that are taking in the content are having a shorter attention span. Everybody right now love the TikToks. People are starting to love the Reels. They're starting to like the shorts. They want 60-second content. You can't put an important ad in the middle of 60-second content. But an hour podcast, a 30-minute video, when I turn ads on this post. So right now I have no ads on, meaning y'all can watch this on YouTube with no problem. But once this video is over, I'm going to turn on my Google AdSense. So when people go watch it later, soon as I'm about to say something important, boom, there go an ad. I can choose and put in the ad wherever I want to, but that takes too much of my time. YouTube is smarter than me. Y'all can put the ads in. So if they are not getting that many ads, they are missing out on a lot of money, and that is big. And Facebook been taking the L. So if they haven't been getting any new users, because users who they are, but remember they had that crypto project, was it Denim? What happened to Denim? I haven't heard anything about it. I believe that project ended up failing. So this is going to be huge for tech tomorrow. So let's take a look at the rest of these stocks for tomorrow. Welcome to everybody that's in here. You should look at a lot of these techs. Amazon, what are they doing after hours? Social media stocks crater after Facebook reports. I'm telling you, all of these companies are going to go down heavy tomorrow. If you are a tech person and you are in a tech stocks, be very wary. And not even tech, it's just going to be a lot of companies going to follow this. It is going to be bad. Now let's see what crypto looking like. I believe crypto is not going to get happy off of it either. Look at that. Bitcoin and went under 37,000. Ethereum is holding strong, close to 2,700. Solana is close to $100. They're teetering right under that $100 mark. Polygon is trying to stay right around 150. Crypto is trying to stay right around 40. I think everything is going to get red and nasty tomorrow. I think it's going to be brutal. So I have to go out and go make some more money. I probably do a live later on. I just want to kick it and let y'all be prepared about what's going to happen. But I have a lot of videos coming up for tomorrow. So that's all I want to talk about real quick. Make sure you guys leave a comment. You can sign up for Public Moomoo. Just check the link in the description. I want to know what's y'all thoughts of what's going to happen tomorrow. And later on tonight, we're going to probably talk about PayPal and what they are doing, because PayPal is looking bad too. I'm Lando Sess. See y'all later.